Welcome back, investors. Today, we are breaking down one of the most highly anticipated earnings calls of the year, NVIDIA's first quarter of fiscal 2027. If you've been watching the markets, you know that NVIDIA isn't just a semiconductor company anymore, they are the backbone of the global AI revolution. In this video, we are going to dive deep into their latest numbers using our ultimate fundamental checklist: revenue, forward guidance, profit margins, sector growth, cash flow, and finally, how they are rewarding you, the shareholder. Let's get right into the numbers to see if NVIDIA's stock is still a buy. Let's start with the main course, the top line and bottom line results. NVIDIA delivered an exceptional quarter, with total revenue hitting a massive $82 billion. This represents a staggering 85% increase year over year, and a 20% sequential jump from the last quarter. They also achieved record operating income and free cash flow, exceeding their prior records. This $13.5 billion sequential revenue increase, which is a company record, was driven by capitalizing on the inflection in inference demand. They aggressively ramped up shipments of their new Blackwell systems across a diverse customer base, from hyperscalers to sovereign AI customers. This marks their 14th straight quarter of sequential growth. While the exact Wall Street consensus estimates weren't detailed in the call, shattering their own historical records across the board shows that the business is still growing aggressively. It proves that AI adoption is not slowing down. As management noted, AI is no longer a nice-to-have, but a necessity. The organic growth engine is fully intact. As we know, the stock market looks forward, not backward. Let's look at their forward guidance. For the second quarter of fiscal 2027, NVIDIA expects total revenue to be $91 billion, plus or minus 2%. This expected sequential growth will be driven primarily by their data center platform. The company stated they are working vigorously on their supply chain ecosystem to address incredible demand. This is highly bullish. The company explicitly expressed full confidence in seeing $1 trillion in Blackwell and Rubin revenue from 2025 through calendar 2027. Analysts are forecasting hyperscale capex to exceed $1 trillion this year alone, and AI infrastructure spending is on track to reach $3 trillion to $4 trillion annually by the end of the decade. With a strong forward guidance, management is signaling that their peak is still nowhere in sight. Revenue is great, but how much money is NVIDIA actually keeping? Let's talk profit margins. NVIDIA reported a GAAP gross margin of 74.9% and a non-GAAP gross margin of 75% for the quarter. Looking ahead, they expect gross margins for the full year to remain in the mid-70s. These margins were largely flat sequentially because their premium Blackwell systems continued to account for the majority of their shipments. A 75% gross margin for a hardware-heavy company is extraordinary. It proves NVIDIA has absolute pricing power. Even as they face higher compensation and infrastructure costs, which pushed operating expenses up 12% sequentially, their premium products allow them to maintain incredibly thick margins. For investors, this resilience means NVIDIA can navigate inflation or supply chain hiccups easily without sacrificing profitability. NVIDIA recently changed how they report their business segments to better reflect their growth drivers: data center and edge computing. Let's look at the key metrics here. Data center revenue hit an unbelievable $75 billion, up 92% year over year. Edge computing generated $6.4 billion, up 29% year over year. Within the data center, hyperscale revenue was $38 billion, about 50% of the data center revenue, while AI clouds, industrial, and enterprise hit $37 billion, growing 31% quarter over quarter. The demand for their Grace Blackwell architecture and GB300 NVL72 systems was massive, marking the fastest product ramp in the company's history. The most exciting takeaway here is the introduction of a new product segment, the Vera CPU. Vera opens up a brand new $200 billion total addressable market, TAM, that NVIDIA has never addressed before. They already have visibility to nearly $20 billion in total standalone CPU revenue this year. NVIDIA is successfully expanding its monopoly from just GPUs into the broader CPU and networking ecosystems. Let's move to the balance sheet and cash flow. Remember, cash is king, especially in a capital-intensive industry like semiconductors. NVIDIA generated a record free cash flow of $49 billion in Q1, up from $35 billion in the previous quarter. This massive influx of cash comes from their staggering sales volume and efficient collections, with days sales outstanding standing at an incredibly healthy 45 days. With $49 billion in cash generated in just 3 months, NVIDIA's balance sheet is a fortress. This allows them to aggressively fund R&D and secure sufficient supply, like increasing their total supply commitments and inventory to $145 billion, without needing to take on toxic debt. They can entirely self-fund their future innovation. Finally, what is management doing with all this cash? Are they rewarding you? The answer is a resounding yes. NVIDIA announced they are increasing their quarterly dividend significantly, moving it from 1 cent to 25 cents per share. Additionally, they announced a massive $80 billion share repurchase authorization, which stacks on top of the $39 billion remaining from their current plan. Management explicitly stated that this capital allocation strategy is driven by their confidence in their long-term free cash flow outlook and a commitment to sharing their success with shareholders. They plan to return roughly 50% of their free cash flow to shareholders this year. Share buybacks of this magnitude are the ultimate bullish signal. It reduces the number of outstanding shares, mechanically boosting earnings per share, EPS, and tells Wall Street that management believes their stock is still a highly valuable asset worth buying. To wrap it all up, NVIDIA's Q1 2027 report was nothing short of a masterclass. They posted record revenues of $82 billion, provided extremely strong guidance of $91 billion for the next quarter, and maintained a fortress-like 75% gross margin. By entering the CPU market with Vera, they are unlocking a new $200 billion market, all while generating enough cash to authorize an $80 billion stock buyback. The transition to agentic AI and physical AI robotics places NVIDIA right at the center of a fundamental shift in global computing. While no stock goes straight up forever, the fundamentals here show a company firing perfectly on all cylinders. Thank you for watching this breakdown. If you found this analysis helpful, make sure to like and subscribe for more deep dives into the financial health of the market's biggest players. See you in the next video.